Welcome to the Recon Trader. In today's video, I will share with you why you should proceed with caution when trading Bitcoin on the bullish side, as we may be headed into a bull trap. So if you're not familiar with what a bull trap looks like, it is basically a bearish decline that ends up with a bullish reversal, and then you end up with traders opening long positions once resistance has been breached towards the upside, only to end up rolling over into a bearish reversal. And so this would be what a bull trap would look like. Now, if we jump over to the Bitcoin chart, we'll start with the 4-hour chart. We get a sell-off, and then we get a bounce up into a resistance level of around 35 to 36,000. And then we continue the bearish movement down, and then we get a bullish reversal once the price comes into previous support levels. And then that bullish reversal continues right through prior resistance, and you can see the volume comes in and this big bullish candle charging upwards. And now we are starting to see the volume fade, and there is the possibility we could see the price retreat back down to prior support levels. Now, with that being said, we could see the bulls step up and continue to push this price action into the 41,000 level, which is prior resistance. And at that point, we could see a retracement back towards the previous resistance level of 36,000. If that holds, we could then see a push back up towards the 41 to 42,000 and perhaps at some point breach those levels. However, if 36,000 doesn't hold, we are more than likely headed back down towards support of 30,000 to 28.8. Now, if we jump over to the daily chart, we could perhaps see a longer term bull trap playing out. We have the decline, we get the bounce into resistance a couple times at 41,000, and then we continue to sell off, and now we are seeing the bullish reversal, and we would need the bulls to push the price above 41,000, maybe even 42,000 to consider a bull trap. And in reality, the 382 level around 44,000 could be the snapping point of the trap and cause that price to roll back over. So on the longer term, we'd actually still need the price to get up and above resistance of around 41 or 42,000. And at that point, we could see the price roll over. And again, I'll refer back to the graphic. We get a sell-off, we get a bounce into resistance, we get further sell-off, and then we get the bullish reversal and the breach of that prior resistance. That would be where the bulls start opening their long positions, and then we end up rolling over and selling back off. And so again, jumping back to the daily chart, we got the sell-off, we get the bounce into resistance, we continue to sell off, and now we are seeing a pretty good bullish reversal. And for this bull trap to complete, we would need the price to breach above prior resistance of around 41 or 42,000, and then roll over and sell off perhaps back down towards support of 30,000 to 28.8. Now, with that all being said, we'll jump over here to the 1-week chart, and we'll see a much clearer image of that actual bull trap and how it sets up. And one more time for you grunts out there, we get the sell-off, we get the bounce into resistance, we get a further sell-off, which then results in a bullish reversal. We would need to breach resistance and then continue up, only to end up rolling over into a bearish reversal. And from what I'm seeing on the weekly chart, we have our sell-off, we get that bounce into resistance of 41,000, it then rolls back over and sells off. And we are now looking at a bullish reversal. And if the bulls are able to breach this 41,000 level, we could very well see the 382 level or around the 43,600 level act as resistance to cause that trap to snap shut on the bulls and then roll back over into a bearish reversal towards previous support of around the 618 level of 30,000 or the 28.8 level, which is also shown to be a very strong level of support. Now, on the flip side, if this ends up not being a bull trap, Then we'd be looking for Bitcoin to get above the Fibonacci 382 level at around 43,600. And if the bulls are able to get above that level, then we could be looking at the start of a new bull market and moving back up towards all-time highs of 60,000. And with that being said, don't look for that to happen overnight. It's probably going to take the next couple months and into the fall before we start breaking above 60,000 if the bulls are ready to start a new bull run. However, we are in a downtrend and we could be just in the distribution phase, which is not uncommon for these bounces before the decline. And if the bears do get a reversal and sell off and are able to breach the 618 level of around 30,000 or that 28.8 level, then we could see Bitcoin sell off into the 786 level on the Fibonacci, and that would put us around 21, maybe 22,000. From there, it's pretty much open air down to 12,000. So at the end of the day, I recommend you proceed with extreme caution. It is a target-rich environment. There are opportunities both long and short, regardless of bear or bull market conditions. And that will pretty much wrap it up. I just wanted to do a quick video and share with you the possibility of this current pump being a bull trap. And so if you like this video, do me a favor, spike a like. If you like videos about trading or investing in crypto assets, that's the type of content I create, so you might want to shoot that subscribe button. If you have any questions or comments, drop those down in the comment section below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.